welcome to one more episode of One on One with Mr. Bond. In conversation with a very interesting speaker today, a guest from Motilal Oswal Mutual Fund. He's the fund manager going to be managing small cap fund of Motilal Oswal. Ajay Khandelwal has been there in this line for the last 15 years and as a fund manager for the past 6 years. Very interesting conversations we are going to have with Ajay. It's not necessarily only for small caps, but it will be many more things which we will bring on for the benefit of the viewers in terms of the current market situations, the valuations, the volatility index, etc. So let's talk about what is small caps first to start with. As all of us know, the small caps is basically the future large caps, mid caps, and then future large caps also. So it's a journey to grow from cubs to tigers is what I would call. Generally, there are 4 or 5 categories of equity asset classes, which starts from micro caps to small caps to mid caps, and then finally they become large caps. This is the journey. Slowly and steadily, micro caps become small caps become mid caps, and mid caps become the future large caps, and finally large caps actually become mega caps. Let us understand the SEBI categorization of what is small caps and what constitutes small caps. Large caps are the companies which are top 100 companies in terms of market capitalization. Mid caps are categorized as 101st to 250th company in terms of market capitalization, and small cap companies, which constitutes the maximum number of companies, is 251st company and above in terms of market capitalization. So case for investing in small caps is what we are going to discuss today. Let me introduce and welcome Ajay Khandelwal from Motilal Oswal to speak with us on various topics. Welcome, Ajay.
Thank you, Sunil sir, for giving us this opportunity.
Not at all, sir. So my question to you is going to be why small caps? Now, what is the what are the bases on which small caps? How do you gauge small caps performances, etc.? So I have step-by-step question which I'm going to ask you, and if you can throw some light on that. So case for small cap investing, the high growth potential is what you had mentioned when we were having that conversation. So what is that high growth potential versus Nifty 50 and Nifty mid cap and Nifty small cap?
So small caps are, by virtue of their size, you expect them to deliver higher earning growth. Now, if I look at from say 2008 to 2021, for a period of almost 13-14 years, the growth was kind of stagnant for both Nifty and small cap. But if I look at the last 3 years, the small cap growth is almost 45% plus, whereas the same for Nifty is around 20% plus. So there's stark difference. Now, this is again, as I said, by virtue of size, but we also have to understand that small cap as a category, because investors have this notion that there is more volatility risk involved with small caps. So
I will ask you those questions separately also, but let's stick to this valuation right now in terms of the growth potential right now. So your thoughts, if you can continue.
So sir, the earning expectation even for small cap for next 2 years, we are expecting more than 25 to 30% kind of earning growth for next, even from here to next 2 years. We expect the earning to improve by almost 25% plus for next 2 years.
Versus Nifty?
So Nifty earning is expected to be around 15 odd percent. So there the difference is fairly stark in growth.
Correct. Absolutely agreed. So that is the reason why you're saying that there's a case for investing in small cap is the high growth potential which happened over the past few years, and it's likely to continue over the next few years also. Now, small is getting bigger. You refer to the size of the small caps. So small is now getting bigger. In 1990s, the small cap average market capitalization was 35 crores, and currently it is almost 12,000 crores. So if you can throw light on that also, how small is becoming much bigger than what we had expected over the last 20-25 years.
So again, sir, as you mentioned, the size of small caps is getting bigger. You also gave some reference points. Here, I would like to bring attention to even the profit pool for that matter.
Okay.
Right now, the small cap profit pool has almost reached to 1,90,000 crore. And the same thing in 2013, 10 years back, when we had the trouble, when so much problems were going through, it was hardly 40,000 crore. So
So
the
you're talking all the small caps companies put together and their profitability is what you're referring to, 40,000 crores versus 1,90,000 crores currently.
Yes. And that is what you refer to the average now, a small cap, which was in 2008, 700 crore, now moved to almost 12,500 crore.
Wow.
So that is the kind of journey Indian small cap has seen in last 15 years, where the average market cap of a company is almost now 15 to 20 times.
Amazing. So naturally, there is a case for small caps because as I had mentioned in the beginning only, small caps are the future mid caps and the large caps. So I'm sure they are getting into slowly and steadily into that mid cap space and then finally into the large cap space. Now, the reason number three, which you had mentioned, is the quality of business. In terms of the how quality of business has improved dramatically over the period of time. So we are again referring to that same 1990s to now. Currently, the last 15 to 20 years, how has it changed?
Uh, so again, coming back to how small caps quality has changed, here I will give you some data point, also some
Sure.
example to help the viewers understand how this whole opportunity is expanding. So you need a large opportunity, a good addressable market opportunity. Then you need products and services to capture that opportunity. And you need the financial wherewithal, the skill set to provide those products and services. Now, just to give an example how this opportunity size is expanding, let's take example of electronics manufacturing as a sector.
Okay.
Now, electronics manufacturing, if I have to break it into how we are exporting and what is our domestic consumption. So last year we exported around 25 billion worth of electronics, which is almost 50% rise year on year.
Wow.
But when you consider China, the total electronics export is north of 650 billion.
My God.
When you compare 650 billion with 25 billion, you understand that the size of opportunity is huge. So that is about export. Now coming to say imports, we want our fully made electronic imports to be. We want that 30% fully made electronics import to come down to 10%, and this is a 5-year journey. So small cap investing is also about understanding the size of opportunity. Where are we in that journey of opportunity? So, because there is concern that suddenly these stocks have moved up. But if we look at the size of opportunity and where are we in that journey, we'll realize that this has just started.
So
So,
basically, what I hear you say, Ajay, is that China plus one story will be a very important segment for some of these sectors where we will be able to manufacture and reduce our imports and get more into
it's
manufacturing them in India.
correct. So that is true, sir. So this is one tailwind, but I'm just trying to help you understand that when we talk about small caps, we have to look at size of opportunity and where are we in that journey. Now, I
Sure.
spoke about opportunity. I talked about the product and services that we offer. Now, lastly, if I have to look at how prepared small caps are, in 2000, say 14, 15, 10 years back, an average small cap company had a leverage of almost zero point 0.7 debt to equity. So they required a lot of external capital borrowings,
Correct.
right? Now that borrowings and capital requirement of say zero point 0.7 has come down to 0.3. So
Wow.
it has reduced drastically. Our small caps dependency on external capital has reduced almost more than half. What that means is these businesses are able to generate cash on their own, deploy that cash into production assets which can help in getting the same growth. So they are self-dependent. That is why when we talk about opportunity and preparedness of small cap, this is a sea change that has happened.
So another data which you shared was that offer for sale. You know, the IPOs which are coming up for the small cap segments, 70% of that is offer for sale and only 30% is for their own expansion requirements, etc. How do you interpret that data?
So again, interesting, sir, because I keep talking about balance sheet health of a business. In small caps, it is equally more important.
Right.
You know, P&L, if there is some kind of delay in business, small cap, any business, that way can again gain that business. But if there's problem with balance sheet, it is very difficult to repair. Now, if you look at last 3 years, the small cap IPOs which have come, if they have raised 100 rupees, only 30 rupees has gone into the company, whereas 70 rupees has gone into the either promoters or PE. That means that small cap businesses now require less capital to grow, and they are producing enough capital to sustain their growth. So this is a very healthy.
So the offer for sale is when the existing investors or the promoters are taking money off the table, and they are still, and in the last 3 years you mentioned that they have grown. So they have grown with these capital expansions, etc. But less and less requirement and dependency on the external capital versus what they are generating as cash flows within the company.
Absolutely.
Is that the way you will interpret it?
Absolutely, absolutely.
Right. The other reason which you have mentioned is that they are less discovered, right? Because the pool of small caps is almost 4,000 stocks. Now it's a big pool to sift through and find the right gems from that pool of 4,000 companies and then decide where to invest. So if you are saying that you as at Motilal Oswal, let's assume is we have that expertise of identifying the right stocks, I'm sure the other fund houses also will be having something similar. So if the small caps are getting discovered by various fund houses, then how is it less discovered versus say the mid caps or the large cap space?
So, sir, if you look at the overall spectrum, in large cap you have 100 stocks, and mid cap you have 250 stocks,
Correct.
150 stocks, and small caps, if you look at more than 2,000 crore market cap, you have almost more than 500 stocks, and if you look at above 500 to 2,000 crore, you have another 500 stocks. So the spectrum is fairly wide here, and you need in-house expertise. So at Motilal, we have almost 150 small cap in-house coverage.
Okay.
And this skill set we have developed over a period of time. So we are almost 20% invested in existing schemes in small caps.
Okay.
So this skill set is developed over a period of time. And also here, I would like to add that our strength is finding those pockets of strength in small cap where we see earning tailwinds. So I will talk about themes when we'll discuss our style.
Sure.
How we approach the whole investment process. So this spectrum is fairly wide. It is important you to have larger coverage, and accordingly you have to play to your strength. So that differentiates, I think, how small.
So as a continuation to that question, the reason why you mentioned, we have the expertise in the small caps, and it's a larger universe. Almost 537 companies constitute 2,000 crores or higher in terms of market capitalization of 17,400 crores. So if you see this breakup, where do you see the sweet spots in which segment and which market capitalization? And because it's a larger universe, the fund manager's role plays an important part in terms of identifying the right stocks. So if you can tell us something about that.
So sir, here I think this is where I think our approach is little different. How we approach the whole space is that what are the growth drivers, which are these factors which lead to earning tailwinds, and what we call as themes, for example. So when we talk about manufacturing, it just is not specific to one sector. A railway is impacted by defense, for example. A PLI scheme is also a part of it. So when we think of this whole spectrum, we think what are those drivers and which are the sectors which benefit through it. Now, I will tell you another interesting data point here is that some of these sectors have very large representation in small caps. So almost more than 50% of, say, industrial equipment, the revenue is supplied for the industry by small caps.
Small caps.
Yes, so there are auto ancillary, for example. 50% of the business is done by small caps.
Amazing. And
Healthcare.
they are not represented in the large cap space at all.
And a lot of these businesses are not represented in large caps. So you have opportunity and you have right product fitment, which falls into small cap category. So that is why when we talk about this differentiated approach, we clearly see these are the sectors where there is a wider representation small cap. They are benefiting because of these tailwinds.
So, but my next question is on the same data point which we just mentioned, that many sectors which are part of the India growth story are not represented in the large cap space, but they are widely represented either in the mid cap or the small cap space. So the opportunities in large caps are limited versus the small caps. So some of the companies, sectors which are not covered in the large cap is industrial products, capital markets, auto components, etc., which you just mentioned.
True, absolutely, sir. So there is a stark difference in in the sectoral representation among different indices.
Right. So that's the reason why you like this small cap space for the India growth story, which some of the sectors which are represented in the small cap space will definitely participate in the India growth story, or that Amrit Kal which we are talking about. Am I correct?
Absolutely, sir. You have put it in a perfect way, sir.
Sure, good. Now the next reason which we are saying is the under ownership in high growth stocks. So you had created some data points which said all actively managed schemes except arbitrage and small cap schemes, how much is there in the small cap space versus all small cap schemes, how much is there in the small cap space, and how do you say that it is under owned segment?
So, sir, if we look at the whole mutual fund industry, only 11% of small caps are held by schemes except small caps.
Okay.
So the multi caps, the large and mid caps, if you put all of them together, only their average holding is 11% in small caps. Now, if we want to participate in India's growth story, as we have already established that how small caps are better earning and now quality is improving, you need these small cap schemes where the average holding should be between 70 to 80%. That kind of visibility and that kind of participation in India's growth story.
So that can only happen when somebody invests independently in the small cap space and not through this flexi cap, multi cap, etc. currently.
Correct.
Correct?
Correct. So what we advise is, sir, based for an investor's profile, the right asset allocation based on their investment preferences. Small cap is extremely important to have right small cap exposure to their asset allocation.
Okay, understood. Do you have any thumb rule as to how much should be in small caps of an investor's portfolio? Is there any thumb rule or there is no thumb rule?
Difficult because, it depends on the requirement. If you have immediate requirement for funds, then you...
I'm saying from the long-term point of view, if I have a portfolio which is a long-term portfolio, how much of that long-term portfolio ideally should be in the small cap space?
So see, if it is done properly with advisors and if it is viewed regularly, then in India, I think a decent size of allocation should go to small caps because advisors are equally important in this whole spectrum.
Absolutely.
Well, the risk that small caps have because of the size constraints, and there is that volatility part is there. So if advisors are used, I think small cap allocation could be north of 30-40% also. If your investment horizon in India is large, So I think it could be a decent size allocation which can help to create that alpha, because small caps create that alpha, and we have data over a period of time how
Correct. So yeah, my next question was the alpha creation, because it's very difficult for the large cap space to now create alpha with the restriction of only top 100 companies being in the large cap space. So if you see this data which you have created, 24 actively managed schemes over period of last 10 years has delivered say 10.63% versus the index having delivered 10.75. But it is reverses the case as far as small caps is concerned. So the index has delivered far lower returns than the actively managed small caps. Why so?
So again, sir, if you look at the top quartile small cap performers versus the bottom quartile, you will find there is a lot of difference.
Correct.
I can give you example. For example, when the earnings slowdown happened in specialty chemical, when say construction, so wood panel industry, for example, building material, small ticket discretionary products, the QSRs, you see the performance in last 2-3 years have been fairly subdued for these sectors. Whereas
Right.
sectors where the demand improvement happened, where the order books visibility is for next 2-3 years, where the margin expansion is happening, those sectors and products have done far better. So there's clear distinction. So you require that kind of active management where portfolios are also rebalanced periodically and they are always levered towards the right earning momentum kind of sectors and businesses. You see this difference over a period of time, and that is reflected in numbers.
So basically, from the unorganized sector to the organized sector post the GST, a lot of small cap companies have come into the radar for investors and analysts. Only for that reason, you see that this segment has started performing better and better now.
Sir, I think a lot of changes happened. Post-COVID, I think the cost rationalization happened, the efficiency improvement that happened. So when we talk about efficiencies, we see that working capital cycle has improved drastically for these businesses. They in terms of having right capital allocation, they clearly are looking at return where there could be right capital allocation. So these changes are reflected somewhere in cash flows, operating cash flows, and multiples.
Perfect. Understood. So, Ajay, my question is, so far what we were discussing was all about why small caps is an important category in any investor's portfolio, right? These are the reasons why you should be having small caps, the way it has improved in terms of the balance sheet, the quality of business, the earnings growth, etc. Now, my next section and the segment which we want to discuss with you is the concerns as to why small caps at the current juncture. So this is the topic where we are going to discuss about what is the current valuations, where do the small caps fit into that valuation matrix, what about volatility, etc. So if you are ready with that, my first question is going to be about concerns on valuation, because a lot of analysts are talking about that small caps and mid caps are overvalued versus the large cap space, so it's better to be investing in large cap currently versus the small caps or the mid caps.
We look at it this way, sir. One is when we talk about valuation, how is the earning deviation from the expectation? So when you look at large caps, the earning deviation between expectation and delivery is fairly low. Whereas for small caps, just to give an example, if I'm expecting say 100 rupees of EPS from a company, a large cap will end up delivering between say 97 to 103.
Right.
Whereas a small cap, it can deliver up to 110 to 120 and at the same time 90 also.
So it can surprise you on the higher side also by a big margin, and it can surprise you on the lower side also by a big margin.
So it is very important to understand whether we are in an earning upgrade cycle or a downgrade cycle. Because we are talking about multiples, and that requires right capturing of earning at the first place. But
Right.
if my earning surprises are higher, Then what happens is we later realize that the starting multiple was lower because our earning expectations were out delivered finally.
Okay.
One is that it is very important for us to understand that where are we in that earning cycle.
So you are expecting the small cap space will have a better earnings potential going forward for the next 2 to 3 years also, versus the large cap space, and that the Nifty small cap 100 versus divided by the Nifty 50, that ratio which we generally talk about. So at the peak it had gone to a high of 0.90. Currently we are at 0.66. You still expect that there is a room for growth in the small cap valuations
So why
based
we
on
look
that?
at this ratio is, sir, because Nifty 50 earnings are better captured. Here, small caps, because of the changes that are happening, it tells you again the size of the overall pie. So if you look at, as you explained, it is at the peak, it was 0.9. Right now, it is 0.66. So we see that there is still a 30% kind of upside is available compared to the last cycle.
Right.
So that way, it gives us a comfort when you have quality of earnings improving, you have quality of balance sheet improving, and you have decent. And also, you have to understand this pie is larger. We still have to find businesses based on our philosophy of QGLP, where we talk about growth, longevity of growth, and at a reasonable price. And
Correct.
the wide spectrum allows us to find those pockets of businesses which are available at a reasonable price. So I would say that given these few parameters, the valuation, I think, is reasonable that way.
Okay. Now coming to volatility part, because small caps generally are more volatile than large cap space or the mid cap space. So if you actually, if you are invested say 1 crore in 2018 in January, small caps value was only 35 lakh. The Nifty small cap 100 की बात कर रहा हूँ मैं. On 23rd of March 2020, it was 52 lakhs for Nifty mid cap 100, and it was 72 lakhs for Nifty 50. When you have such volatility in the markets as far as small caps is concerned, and we are at reasonable valuation, we are not neither cheap nor expensive at the current valuation juncture, with so many global headwinds which we will talk about. If volatility is the criteria, then don't you think the investors will face a lot of headwinds as far as volatility in the small cap space is concerned at the current juncture?
I think so. Here also now data, for example, how earning momentum shifted in small caps. Here, even the price performance and volatility is far supportive to small caps now. So
Okay.
between 2007 to 20, the volatility was north of 20%, while returns were dismal.
Yeah, almost
Only
2 to 3% or
3%.
something like that during that
Yeah.
period.
But last 3 years, if I have to look at, the volatility has actually come down.
Because of the
It is
growth
20.
which is happening, the earnings growth which has happened.
Yes, and the price momentum is also more homogeneous now. So the return is north of 40%, whereas volatility has come down. So
Wow.
this
Okay.
is all a culmination of how the business operations are proceeding, and that is what I think investors need to focus on.
But don't you think the current growth in the small cap space is all due to the constant flows which is happening through the SIP books, the lump sums which are happening in the domestic segment? I'm sure the large cap space is where the FIIs and the FPIs would be investing, but the domestic flows are all happening looking at the past performance in the small cap space, and that becomes an intermittent flow. So when something goes bad in the small cap space, all the investors will run away. So how do you, because it's just the liquidity driving the markets, or is this something beyond that? Is there a structural change now?
So again, sir, a great example of how things have changed in India with this India stack coming, the combination of all three things, the UPI, how it has become so easier for investors to come and participate in Indian market. In last 1 year, I think there are more than 25 to 50 million SIPs which are registered. So these are granular flows, more structural in nature. And as I explained, it is by virtue of earning that this money has come into small and mid caps. When we compare the operational performance of large cap versus mid and small, that difference is clearly visible.
Right.
The flow is granular. The ease of operating and bringing the friction cost has come down. More investors, more demat accounts are opened because of this new India stack. So I think these are more structural flows, and our dependency on FII flows has clearly gone down drastically. So this clearly is another theme that we believe in, which is structural nature.
So in case, so what I hear you say is, in case there are some headwinds and there are some volatility going forward, corrections happening in the markets for whatever reasons, this flows will continue to remain through the SIP route, through the structural changes which the investors are looking at, and of course the earnings growth of the small cap space. Is that correct?
Absolutely, absolutely, sir. So we need to focus on operating performance, and these flows, I think, will continue, because it has surprised every month we hear the SIP flows and the number is increasing, right?
Yeah, correct. Absolutely. Now, my next question is the global headwinds, the geopolitical issues. I have discussed this with Niket, I discussed this with Aditya also, that are we so decoupled from the global markets that we will have no impact of the global macros which are deteriorating? So some of the global macros which I refer to is the inverted yield curve in the US, which points towards imminent recession going forward. European markets, some of them are already in recession. China is a slowdown happening in the economy. Number two is the higher interest rates, which will have a lag effect on the corporate balance sheets. Earlier it was a TINA, there was no alternative, so equity में डालना ही पड़ता था because it was a zero interest rate regime. Now there are alternatives available at 5%. If I am able to invest in 3 months CP, why would I take a risk? So, these are some of the, and the debt in the US, the deficit in the US markets, which is humongous. And if they have to actually fund the debt deficit, some of which is falling due in the next financial year, at higher and higher levels, the interest burden is just going through the roof. So with this kind of headwinds, plus the geopolitical of Hamas and Israel, Ukraine and Russia, and the possibility of crude spiking and inflation rising once again versus softening. So do you think that India is going to be so decoupled and will have no impact in the Indian markets in that context?
So specific to small cap category, the dependency on export is hardly 10-11% compared to the large cap, where it is much higher at 23 to 25%. So clearly our dependency on export is lower. Secondly, even if we look at what has happened outside, somewhere this adversity has come as an opportunity to Indian businesses. So when we talk to, say, pipe companies, which are, because of this whole problem that has happened, the US, the Russia, Ukraine, now US and Europe is trying to diversify their dependency on oil. So a lot of these pipeline companies are seeing order books, which are last 10 years, they have not seen that kind of demand coming from US and Europe. The cable companies, the conductor companies. So the businesses actually have benefited out of this adversity for small caps specifically.
Oh, okay.
So I would say one is we have lesser dependency. Second, this is actually come as an opportunity.
An opportunity.
Yes. So there also, I think small caps are better placed.
So there will be headwinds, there will be corrections, there will be some kind of volatility in every segment, because large, mid, and small caps all correct at the same time. If there is volatility in the markets because of various issues, election is round the corner again. But those are opportunities for investing more and more into this segment, is what I can hear you say. Am I correct?
Absolutely, sir. There will be knee-jerk reaction. Market always surprises you when you least expect it to.
Correct.
But last 5-10 years, how we have seen the recovery has always been V-shaped, because it is eventually the business fundamentals that drive the market. And considering the macro and micro factors, I think small caps that way have much lesser dependency to any of these adverse movement that we can expect. So again, as an asset allocation wise, investors should look at this category. Extremely important that way.
Perfect. So finally, Ajay, if you can throw some light on how do you, as a fund house, identify stocks, sectors, and use your QGLP to your the investor's advantage in terms of sector selection, stock selections, and what are the internal guidelines for that?
Right. So, sir, we have a well laid out investment philosophy, QGLP, as we have articulated it. We talk about the quality of business, so that requires management pedigree, the kind of management expectation that we have in terms of, right business selection, right capital allocation. So that encompasses the quality of business and management. Then we talk about the longevity of business, because earning growth is extremely important. India is a growth story and we focus on growth. So we look at businesses where the addressable market is large and they can capture this fair runway of growth. So we talk about growth and longevity and at a reasonable price, because if you want consistent wealth creation, you need to pay fair price of a good business.
Correct.
So we have, as I explained, we have a large number of stocks under our coverage, and our investment team also has very good experience, starting from Mr. Ramdev Agrawal to Naveen Agrawal, Prateek. All these are veterans in the market, and we as a team try to find those right growth drivers, earning drivers, which will help different sectors and stocks. That is why, as I said, you will see that we have these themes representation in all our portfolios, and that clearly helps us in finding the right pockets of market that leads to the alpha creation.
That is one. Second thing is you don't have a small cap right now. So as in when you come out with an NFO of small caps, you will start on a cleaner slate, in so to say, to identify the right stocks, right sectors, etc. How does that benefit versus the existing small cap scheme? So if somebody had to invest in a small cap NFO with a cleaner slate versus the existing small caps, how does that benefit the investors?
So, sir, see, current small cap schemes, if you look at some of them, the sizes are very large. So they do
Correct.
not have the flexibility to change their portfolios, right? So wherever stocks which have already reached closer to their fair value, there the changes are difficult to make in large size portfolios. For us, we are starting fresh. We will be looking at stocks around 30 stocks between 1.5% to 4.5%. So we will not have large concentration stock wise, but it will be a tightly knit portfolio where we have our high conviction bets in right allocation at a fair value. Because see, again, to create wealth, you need to have that right valuation also. And with a fresh portfolio, clearly you will not have any legacy issues. So these are some of the things which clearly will help investors.
If and when you come out with an NFO.
True.
Sure. Thank you so much, Ajay. It was really interesting talking to you. And I'm sure the viewers would have benefited out of our conversation in terms of understanding this not so known space in the small cap space. Because small cap space right now, people are just investing, looking at the past performances, etc. But at least now they will have clarity as to why they are investing and should they continue investing or not. Thank you so much, Ajay.
Thanks a lot, sir. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.